bank stocks, they dropped on that Moody's downgrade, but when you look at both the KRE and the KBE, over the last week, they're still positive. So following that downgrade and some of the warnings of a downgrade of even the bigger banks like a JP Morgan and Citi, what's your view on financials?
Yeah, so my view on financials is that we're actually in a recovery mode. Because if you think about it, we had the Fitch downgrade a few weeks ago. Same thing happened with the banks. We're hearing the same thing with Moody's now. So what we're going to see is that the banks are going to recover from this. Now, banks are still down some 24, 25% since the beginning of the year. But we still think that this is a time to get into banks, and we're starting to really start to invest back into banks in this period.
All right, so obviously this week we have CPI coming up, closely watched inflation gauge by the Fed. What are your expectations for CPI? How do you see it move in the markets, especially if it comes in hotter than expected? Looking at the CME right now, more than 85% chance of a pause, according to the CME. How much of what we're seeing in the markets, a little disruption lately, but is it based on the idea that we've reached the end of this hiking cycle?
Well, Frank, we definitely have seen the most of the hikes already. What we're seeing is that we still have that sticky CPI that we really look at, because the Atlanta Fed did a lot of work on the sticky CPI and flexible CPI. The sticky CPI is starting to come down. So we could see that the Fed could do one more or two more rate hikes. So we're still seeing that the Fed needs to control that sticky CPI. Sticky CPI is still at about a 5.8, and we want to get that down lower.
So wait, you're saying we're near the end, but you're saying there might be one or two more. That doesn't sound like we're that close to the end then.
Well, but we've seen most of the hikes already.
Okay.
We went a long way.
But you don't think one hike or two hikes makes a big difference? Is that what you're saying?
Exactly.
Okay. All right, very, very interesting. I think, it seems like there's some stress on the markets right now, but if you're saying you don't believe that, so as we look ahead to today and the rest of this week, where do you see opportunities in the market?
What we see in opportunities is that we're looking at international markets also, because we see a lot of value. Let's talk about India. We started off talking about China and the problems there. What's happening in India, India is actually benefiting from that, because you're seeing a relocation of manufacturing from China to India. You have strong middle-class growth there. You have GDP growth over 7%, plus you have a skilled labor market. So we are seeing some benefits there. ICICI Bank, a bank that's benefiting from that. And so we're looking at those international markets now, because ICICI Bank has really strong earnings expectations and revenue expectations going forward. It has a return on tangible equity of about 15%.
Really?
So we really like that stock.